SaaS company Upsales reported the third quarter 2022 this morning, and on link I have its founder and CEO Daniel Wikberg. Welcome.
Thank you.
After reading your report, I assume you are in a very good mood.
Yes, I mean we're very happy with the third quarter. Continued rapid growth and an all-time high in EBIT margin. So overall, we're very happy with the results.
I believe so. You reported an operating profit on 11.3 million Swedish krona during the quarter, quite an increase from last year's 2.8 million. What would you say are the driving factors behind this development?
I mean, I think the primary factor is just increased effectiveness. We've increased revenue quite a bit, and we haven't seen the need to increase our cost base as much. And there was some seasonality as well in the third quarter due to lower personnel costs, since that's the quarter where people are on vacation, and also slightly positive effect from currency fluctuations. But still, all in all, the major effect comes from increased revenue with higher effectiveness.
I read that net sales grew by 45.7% to 32.7 million compared to 22.4 last year. And I must say it's more than impressive. And how is this distributed throughout your various markets?
So our focus now is I mean, the majority of the revenue and the growth is still coming from the Swedish market. We are now entering the sixth quarter since we started focusing on the UK market and our international expansion. So in terms of revenue growth, it's still a small impact from what we're doing in the UK. We continue to see progress. We're closing new customers every quarter. But I think that we are still a few years. It's still a few years in the future until UK is like a larger part of our growth.
Yeah, I go to your report and you write that Q3 is usually a slower quarter, just like you recently said. And I quote, "Yet another record quarter with ARR growth, exiting the quarter with 7 million in ARR." What is it that worked differently this quarter?
I mean, I think the ARR growth rate is a new all-time high. And I think it's just the effect of the focus we've had the last few years on just improving the scalability in the product, as well as building and improving the sales team. I mean, we did quite a lot of hires last year, you know, it's for people to be successful in sales, it takes time to kind of build the momentum and build the competence to be on, so to speak, full effect. So I think that's also a reason that a lot of the people who are ramping during the spring are now coming into like a higher degree of productivity.
Thank you. In the report, you state that you'll focus your attention on customers with between 50 and 2,000 employees as your sweet spot. And this is not new, but it's quite a spread. How did you decide on this size?
I mean, I think if you look at the market, you have just the market in general. Most companies are really small companies. If you just look at all the registered companies out there. And for businesses with like 4, 5, 6, up to 10 employees, I mean, we have those customers, but we feel that where we can deliver the best value and the most value are slightly larger companies. And we think that we are more competitive in that space. On the other end of the spectrum, I mean, we have customers with more than 1,000 users using Upsales. So the product is able to deliver to really large companies, but we see that like around 2,000, 3,000 employees, it starts to shift more towards like really large companies, like the large enterprises. And we see that it's not as effective scaling the sales organization towards those companies. So we see quite clearly in the data that up to 2,000 employees, we are very competitive These are very interesting customers for the use cases we solve.
Right. When it comes to growth, I know you have almost gotten rid of churn, or your churn ratio is very low. How is it between new sales and upsales coming to growth?
So historically, there's been like a 50-50 split in the growth, half coming from new customers, half coming from existing clients expanding. The last year, I would say it's shifted slightly more towards existing customers, and it's not because we are doing less new sales or bringing in less new clients. It's more that the work we're doing with primarily our larger customers have been very successful in the last 4 quarters. So that's made the growth in percentage slightly higher from existing clients.
You also mentioned in the report that you soon be launching a premium offering with tailored services for this segment. Could you elaborate on what you will be able to offer this segment?
Yes, I mean, our pricing model and the way we work with our clients is based on a land and expand model, which makes sense for companies that are around 40-50 employees up to a few hundred employees. But when you become a larger company than that, the kind of services you need are slightly different, and the willingness to invest more money in getting a more tailored experience and tailored service is higher. So that's why we are kind of breaking up the product in two directions, with one of them targeting customers, starting from 2 million kronor per year and up, with things like dedicated support and more dedicated services around the product.
All right, and with all this in mind, how large do you estimate the addressable market to be?
I mean, there's no exact data available on this, but we estimate that we are at around 135 million kronor in ARR right now, and we believe that only our existing customer base can go to half a million. So there's a huge opportunity within the existing customer base. And when we look at our sweet spot of the customers we work with, when we define them as in terms of size and the industries we target, in terms of the number of customers we have and the number that's available out there, we believe that in Sweden we still have between 5 to 7% market share. So there's a huge opportunity there as well. So and then we have the UK market, which is estimated at 24 billion kronor. So yeah, we have a long way to go. We have a long runway of growth ahead of us.
You're also working with AI in your products. Can you tell us what does that mean for you in the coming years?
Yeah, it's super interesting what we're doing, especially in terms of forecasting and helping our clients manage their pipeline and spend time targeting the right kind of customers. So we are constantly adding more ways of collecting data that we use to help individual sales reps and also sales managers to become more accurate in their forecasting. So that's one area which is very interesting. We're also helping our customers identifying the most probable ways of growing existing accounts, also based on a lot of data. And what's interesting is that you don't need to have that much data yourself as a customer, because we combine our customers' data with external data sources like company databases and stuff like that, which enables even small companies with not so much data can also find great improvements using these features.
So all your clients can use all your findings in the client base overall?
Absolutely.
Okay. In some material that I read about you, you talk about the E40 Rule. What is that, and what is your movement on that scale?
Yeah, so the rule of 40 it originated in Silicon Valley a while back as a way of measuring how a company balances growth versus profitability. So basically what you do, you take your revenue growth rate and you add that together with your free cash flow margin. So, and if the number is above 40, you're considered to be an effective company. So we actually publish a report every quarter on all listed SaaS companies in the Nordics with a ranking. And I mean, Upsales is a very, I mean, having this kind of profitability together with the kind of growth we're having is yeah, not many companies achieve that. So that's something we're very, very proud of. And our E40 continues to improve.
Okay. So on what place are you on the E40 rule in Scandinavia or Nordics?
I don't remember. I think out of 50 companies, we're at 4 or 5 or something like that. So yeah, we're in the top, but we continue to fight to improve.
Always new things to achieve.
Absolutely.
You also commented in the report on the current macroeconomic landscape, high inflation, higher interest rates, and market turbulence. You could expect lower demand, but you do not note that. What is it that makes your service so resilient?
I think a couple of things. In challenging economic times, I think it's maybe even more important than in booming times to have a high degree of effectiveness in your sales team, to keep track of cost of sales, and to just you know, keep a close eye and keep track of what's happening with your existing customers. And I mean, since these are the core areas we help our customers with, I think that we will continue to be an important part of our customers. So I think there are a lot of other things you get rid of in terms of cost cutting before you throw out your CRM system. So I mean, we haven't really seen any impact yet in terms of, you know, higher churn or more cancellations or slower growth with new clients. And it's yeah, of course it's very hard to predict what's going to happen, but we try to monitor the situation every week. And I mean, since we have a very scalable offering that doesn't require you to invest millions of kronor in an implementation project to get started, I think we are a more attractive alternative for the customers continuing to doing investments compared to a lot of our competitors. So yeah.
Thank you, Daniel. That will be a great ending for this interview, and we are already looking forward to your next report. Thank you so much for your time, and congratulations.
Thank you very much.